You've been online, you've learnt the videos, you understand RSI, MACD, support and resistance, ORBs, open range breakouts, yet still doing all of this, you're losing money. Now, if that resonates with you, it resonates with every beginner trader. You're not on your own. We all went through that before we realized how the institutions actually trade. Let's take a look at the first example. You've put on a bullish divergence and you think, well, it's starting to go up now. This is looking good. I'm going to go in. So you go in. But it was a fake breakout. It took you up and you were feeling confident, but then you got stopped out. Another one, bearish divergence this time. Oh, bearish divergence. Let's go short on this one. What? You've been caught by that before, haven't you? We all have. Definitely. One final one. Bearish divergence again. Whoa, that's been going up some time. That's got to want to breathe, right? That's got to go down. Whoa! Again. And again. And again. Okay. When you first start trading, and I've used this image a few times, it's like a big secret that institutions are hiding behind a very large curtain and you can't quite peer behind. But I'm here to tell you that you can see everything they see when you use TradingView. It's a very important charting software to use. I have a link for it down in this description. There's a free version, but it limits you, but it is very usable. And then as you become more of a trader, you can upgrade. So we're going to rewind these and we're going to start again. First, back to Sahara USDT on Binance. You were looking at this bullish divergence thinking it's going to go up, but it didn't. It went further down. Now, when you trade, and particularly if you're a beginner trader, you should always try trade with the higher time frame trend. So let's have a quick look at this. On a higher time frame, this has been going down for quite some time. In fact, it's fair to say that all the alts have been going down for quite some time, as Bitcoin's been going down for quite some time. But you're looking for a bullish divergence here for it to go long. In PulseFlow, this is how I determine if a coin is in an uptrend or a downtrend. I use EMA 50 in blue and EMA 200 in yellow locked to the 4-hour chart, which is very easy to do. When you put on your 200 time frame, instead of picking chart, you pick 4 hours. Then regardless of what chart you're on, that will show you the EMA 200 of the 4 hours. So you can clearly see that in Sahara, we're in a downtrend. But what else? Let's put on fair value gaps. So although there's been this bullish fair value gap here, look at all the bearish ones above it. Warning sign number 1. Now let's put on order blocks. Okay. First of all, we have a bullish order block here that's been mitigated. And if you've watched my other videos, and I'll put the link up here right now, you'll see that this then becomes a bearish breaker block, the green dashed lines. So that actually is resistance. But even if it went above that, there are huge bearish order blocks above us that it would have to fight through. Let's move to the 1 hour. Oh, look at that. That is begging for the fake breakout to happen, where it comes up here, pings it for some liquidity, and then goes back down. In fact, let's just let it run that little bit. Whoa! And then it shoots down as if by magic. But it's not magic. This bearish order block has lots of trapped liquidity, and the institutions need big amounts of liquidity to place large orders to take the price down. So what they do initially is take the price up, and you get caught with that fake breakout. But had you have seen this, that wouldn't have caught you out, would it? Next example, the bearish divergence in PYR USDT, PYR. Let's not let this run because we know it fails. Let's look for other confluences. Oh, look at that. a bullish order block. We're bouncing off a bullish order block. Is this likely to go down? The other thing to note, if you go to CoinGlass super charts, they are fantastic. CoinGlass is a great site, particularly if you're using leverage in futures. But look at this. You've got your bearish divergence, but look at the CVDs. CVDs, you say, what the hell are they? But I will show you. But first, look how they're rising. That's telling you that buyers are in control. And as it's rising, it gets this bearish divergence, it's rising, and then it pops off, which is what we saw when we ran it. So what are CVDs? I'm going to take you to a different coin, and I'm going to show you the volume footprint. And on TradingView, it's this menu, volume footprint. Get ready to have your mind blown. Let's zoom in. What is this mess? Wait a minute. Wait a minute. What's all this information? What is all this information? This tells you whether buyers or sellers are in control and at what price in each candle. And a CVD is this delta here of more sellers than buyers here. If there is a massive range of sellers where the strongest one is, it forms these little bands here so you can see them. And guess what? They act like resistance. Now, let me tell you what I'm going to do. I'm going to put on a line here. Oh, by the way, before I show you the next thing, I have a video on the volume footprint that's going to come up above right now. Let's put that line on and go to our good old friend Points of Control. Another video I do a deep dive in is the support and resistance video for Points of Control. And let's go back here. Look at this. This line here. Let's just move that slightly. Then go back to the footprint. Oh my word. It's right in the middle of this here. This is when you start to understand there isn't momentums and RSIs and MACDs and or whatever else the YouTube gurus tell you. It's actually where the money flows, or a phrase we use in PulseFlow and is used in the industry, institutional money flow. It's something you really should get your head around. Most of my videos are focused on those kind of techniques. That's where CVD comes from. Enough of the deep dive on that. I have a full video on it. And when we let it fly again, that's why. Look at that. Bullish order block, rising CVDs are a much stronger confluence than bearish divergence. This is how I use RSI divergences, because I do show them in the PulseFlow alerts. C98 USDT. If I show you here, bears in control, hidden bearish divergence detected. Tends to pull back before moving up. You get all this data in PulseFlow, which is very much institutional money flow based. But I do use these as extra confluences, not the only one. They're kind of less important than some of the others, but they're still important, taken in context with other things. Our final example was GPS. Again, you had a bearish divergence. Look at CVDs. Now let's do the same thing we did before. There's a fair value gap here. It's supporting price. Order blocks. Oh, you're inside bullish order blocks. There's heavy, strong buying support here at this level. So the RSI divergence is the weakest of those confluences. The only thing you can use it for is to say this could come back down again to come back to this fair value gap or possibly sweep this order block before it goes back up. That's how I use them. So if I was going to put on a long here, I might put it here and then put my stop loss well below that. I can't remember what happened to this one. I might be completely wrong. It didn't come back down this time, but it had done before, right? But do you see my point? Fake breakouts captures because we don't understand where the money is flowing. We don't understand where the institutions are taking us. You can't eliminate fake breakouts completely, but you can certainly minimize them when you start seeing where the institutions are taking price and why. And what's so brilliant about this approach is RSI divergences on RSI are lagging, right? Whereas when you see order blocks, you kind of know the institutions are going to drag price down to it at some point in the near future. So it's like you can see slightly into the future rather than waiting for something to already have happened to prove to you it's the time to go in. The difference is huge, and the difference between a retail trader and a pro trader. So stop chasing breakouts and start reading what smart money already knows. Thanks very much for getting to the end. Please watch one of my other videos down here. The next course will be coming out in a week. Please subscribe, like and share, and I'll see you in the next one. Have a great day.